Okay, good morning. Final day of the week, final chance to position ahead of the Greek vote over the weekend. It is a US bank holiday though, Independence Day tomorrow, so bank holiday today, US markets shut. Certainly this afternoon is going to be a quiet one, and perhaps also this morning, given that we're probably not likely going to get any Greek developments today. It's already clear that European creditors don't want to talk to the Greek government until after the vote. That has been made clear. So it's unlikely we're going to get too much action on the Greek front. And so therefore actually this morning might be pretty quiet as well, given that people are just going to want to wait. They don't want to put themselves at risk, because we're most likely going to get, we will definitely get the Greek referendum result before European markets open on Monday, and we may well see that vote sort of midnight on Sunday. So it's probably likely going to be a quiet affair today, so you've got to gear up for that scenario. Patience, modest profit expectations, this is the way. So let's just look around the markets here now. It's been, if we just take the week as a whole for the DAX here, then where we find ourselves trading around 11,100. This is about the midpoint of that pretty phenomenal range that we had on Monday. If you just put a fib series on the weekly range, then this morning we just dipped briefly earlier on below yesterday's low, and this put us right on the 50% fib level, so we're bang in the middle, and this really tells you the story, and that is people freaked out on Monday, markets opening sort of 5% down, then of course the panic calmed somewhat, and we recovered from that 5% down, finished 3% down still on the day, and then ever since then it's just been a very noisy week, as various positives and negatives in terms of headlines has been spat out of the Greek engine, and we've just been chopping around, and really we find ourselves midpoint of the range, which is about right. And we probably aren't going to see this market, I would say if anything you'd probably favour the downside, if anything, for stocks today, just as people de-risk perhaps before the weekend, if they haven't already though. That de-risking perhaps took place on Monday of this week, but maybe there might be a little bit of nervousness going into the close, so if anything maybe a slight negative bias here for stocks as we go through the session, but I'm not expecting anything dramatic, unless of course we get some kind of headlines. But if we just talk about Greece and just map out what's going to happen here over the weekend. So the vote's on Sunday. What are they voting for? They're voting for whether to accept the Eurozone creditor proposal or not. The weird thing about this is the proposal they're voting for actually isn't on the table anymore, so it's a very strange one to say the least. So the vote's going to happen on Sunday. It's going to start at 7 a.m. Voting booths close at 7 p.m. So there's uncertainty whether we're going to get an exit poll. Apparently it's not likely, and so votes will obviously start getting counted, and it depends how close it is, but we might get a result maybe somewhere around midnight Sunday perhaps. It might be a really close vote, in which case I don't know, there's various recount scenarios that you might have to factor in. The reason why I say it's going to be close is because one of the polls that was conducted yesterday, so of 100% people being polled, 43% said they'd vote yes, 43% said they'd vote no, and the remainder of course said actually we don't know yet. So it really is right on the knife edge. Now, also, you've got to factor in the fact that polls, can we really rely on them anyway? The UK election earlier this year was a classic example of where opinion polls before an event couldn't have been more wrong. So how reliable this information is, you've got to seriously question it anyway. So really, we go into this vote of the weekend, and it really could be either. It could be a no and it could be a yes. So let's talk about this. I've got the Goldman Sachs report through this morning, which I think sums it up quite nicely in terms of what might happen given each scenario. So I'm going to just put this on the screenshot here. I'll send this out as well. So obviously there's two possible outcomes, but that definitely doesn't. But it's definitely not that simple. So obviously they're going to vote yes or no. If they vote yes, this is definitely their most market-friendly result. And there's two possible outcomes after a yes vote, and this is the thing about this vote. We're going to get the result, but that definitely doesn't bring to an end the uncertainty, or it doesn't bring to an end this Greek saga by any means. So if there's a yes vote, you've got two potential paths then. Number one, the Greek government resigns, or at least, Varoufakis at least has said he is out. He confirmed this yesterday on Bloomberg, live on Bloomberg interview. He said, if they vote yes, I'm going. Tsipras has been a little bit more vague about it, to say the least. So you've got two outcomes from a yes vote. Either the Greek government resigns and we have a new political party or parties who head up the new government. Now, it may be a technocratic government. I would say this would be the most market-friendly result, but the most market-friendly result. It's a yes vote and Syriza fall, and we get a technocratic government installed, which would be a broad base of parliamentary support and committed to a short, limited tenure with promises of elections once the mess has been sorted out. Okay, so a yes vote and Syriza fall, this would lead to a rapid agreement. This is exactly what the Eurozone creditors want. That would see the fastest possible path to an agreement with the creditors for Greece to get a bailout extension. The IMF were talking about this last night, saying that Greece need a 60 billion euro 2.5 year bailout extension plus debt restructuring. This is what the IMF say. So if we get a yes vote and Syriza fall, that's definitely the best scenario. You're going to get a risk on. You'll definitely get equities enjoying that result. You'll get safe haven debt, German bonds selling off. You'll get peripheral bonds moving higher, so that will be spreads narrowing. Okay. There's a second path, though, if there is a yes vote, and that is that actually the Syriza government don't fall. The Syriza government stubbornly stick around and try and do what the Greek people have asked them to do, which is actually just agree to the creditor deal. Now, the risk with that is, will the creditor deal be still on the table if Syriza is still in government? There's not a good relationship between the Syriza party and Eurozone creditors. That would make that process of finalising a bailout extension more difficult, and it would take longer. Now, the longer it takes, well, then this is the longer Greek banks stay closed. This puts more risk or more pressure on the ECB, because what do they do with their emergency funding for the Greek banking system? But it would still be a positive outcome. A yes vote and Syriza still there trying to finalise the deal. That would still be a positive outcome for markets, but a less positive one. So if it is a yes vote, we've really got to then see on Monday what happens. Does Tsipras resign? Varoufakis has promised to resign. Will that actually happen? We'll have to wait and see. The big negative result will be a no. Now, this opens up a lot of uncertainty. The problem with that is, from Europe's point of view, is that this makes the Syriza government, sort of more entrenched. It gives them that, democratic license to carry on in the vein they've been pushing for already, and that's been a process over the last 5 months that has really hasn't really got anybody anywhere. So the big negative is definitely a no vote, and it could easily be a no vote. Now, in that scenario, you might actually find, in that scenario, Syriza go back to the negotiating table with what they feel is now a much stronger position as a result of the message from the Greek people. They will dig in their heels and continue to insist on improved terms. Now, Europe don't like the Syriza party. Whether they're going to be prepared to give in to their demands, who knows? That's a process that could take a long time. Look, they've been at it for 5 months and still haven't got anywhere. So who's to say it's not going to take another 5 months? Now, the problem with that is, of course, that in the meantime, the Greek economy gets killed because banks might well stay closed, or capital controls will remain in force. And then you've got a real problem from the ECB's angle, because if there is a risk that ultimately no deal's going to be done, can the ECB carry on funding them? The only thing to think about there is the longer it goes on, if it's a no vote, the longer the negotiations go on without a deal, well, actually, the worse it is for the Greek economy. So actually, the more risk the Syriza party put themselves under. It may well be that you could get a no vote and the Syriza party get kicked out of government as well. That would take a while. That would take months. But it's difficult to see how the Syriza party are going to pull this one off, remain in power, without them actually exiting the euro. I would say the safest path for the Greek Syriza party to stay in power, ironically, is perhaps that route out of the eurozone. So anyway, the no vote's definitely going to be taken negatively. You're going to get sharp reaction lower. Now, I'm going to bring in my Eurostoxx chart here just to give you a sense for how low markets might go on Monday in reaction to a no vote. Just going to draw a line here. Goldman Sachs think, and they've put a massive range on this, they've been pretty non-committal, I have to say, but they think anywhere between the two lines I've drawn. Sorry, no, that's not fair. Hang on, I'm going to draw another line. Sorry, I got that wrong. So they think anywhere between 3,250 and 3,000. So they think anywhere between this space where I'm drawing the arrow. That's could be as much as a 10% move to the downside. I don't think they're necessarily saying that'll happen Monday morning, but over the course of the uncertainty and carnage that ensues after a no vote, they certainly expect another very big steep move to the downside for European equities, steep move higher for Eurozone safe haven bonds, widening of spreads and so on. Okay, so I think Monday morning it's going to be a straightforward knee-jerk reaction on markets. A yes vote's positive for risk, a no vote's very negative for risk, but then that's not the end of it. Then what happens politically thereafter, and how long it takes to get a deal done or not. This saga is going to be with us through the summer, unless there's a yes vote, the Syriza party fall, and then maybe we can get this thing wrapped up in a week or so. I'll send you this report from Goldman's. It sums it up quite nicely. Okay, so let's just have a quick look at yesterday's session. Not too much to talk about, quite quiet. We had some downside on European equities, but it just got us back to the kind of midpoint of the week's range. US was flat. Of course, we had payrolls data, and the payrolls numbers, well, on the headline, marginally disappointed. But I was just reading this morning, and let me actually maybe just bring up quickly, if I can, just give me a second. I'm going to bring up a chart of payrolls. Of course, the numbers came in marginally lower than expected on the headline. So for the month of June, sorry, I'm just trying to find the chart here. For the month of June, 223,000 jobs were created. I'm going to pull in the chart here. Here's the payrolls chart for the last 12 months. 223, slightly like 12,000 worse than expected. I think we had 235 as a forecast. So that's fine. That figure alone is absolutely no problem at all. We did get decent downward revisions though to the previous 2 months. So May was 280,000, got chopped to 254. April was just over 200,000 and got chopped down to 187,000. So you got a net minus 60,000 revision to previous months. However, this is fine. And actually what I read this morning, quite an interesting stat, the 12-month average for non-farm payrolls after yesterday's data, the 12-month average is 250,000 a month. Now that's good data. There's nothing wrong with job creation. This is strong, and the Fed aren't going to be worried about payrolls data yesterday. What they might be worried about, however, is the wage growth figures that definitely disappointed. So on the month, wages didn't go up. They were flat, 0%. We had expected a rise of 0.2%. Also, they chopped the May reading from plus 0.3 down to 0.2. On an annualized basis, wages went up 2% in June compared to June last year. This is not going to lead to the Fed hiking rates. The probability of a September hike after yesterday's data definitely went down. So I actually think, and I've thought this all year, and my thought is that we're not going to see a hike till December. This has been my view. I think that view has definitely been challenged. I felt quite nervous about that view over the last, let's say, month. Certainly when we got that 280 reading for May payrolls at the start of June, you had to really start thinking, well, maybe, just maybe, they're going to make a move in September. But I think after yesterday's data, especially on the wage growth side, especially with risks like Greece, I definitely think December's still the window for the Fed to make a move. That's what I think. Whether it'll be right or not, obviously time will tell. So payrolls yesterday didn't really create much action on equities. In fact, the S&P closed flat. What we saw was a lift on T-notes, so that's yields dropping. We saw marginal dollar weakness, and again, hardly anything. Obviously, sharp movements immediately after the data, but if you just look at the euro dollar, where it's trading overnight, where it kind of closed was only, well, it closed around about 111, and before the data we were trading, 110, somewhere, it went up about 20 pips, okay? So the dollar weakened, but only very marginally, with definitely a bigger move on T-notes in response to the payrolls data. So slight dollar weakness, slight downside on yields, and stocks didn't go anywhere. So pretty unresponsive from a market's point of view. What was quite interesting on crude yesterday, we had a great technical test, really nice technical test. We flagged this up, the 30th of June low, 57.94, bang on the money, and then check out what happened into the close last night. All giving the gains from earlier on, giving them all back, and actually then trading down through Wednesday's low. So a pretty impressive reversal there. And if you look on the daily chart, this is interesting, because where we're trading this morning, or briefly this morning, and yesterday's low was bang on this low from May. This is very, very important where crude oil is trading right now. So actually, one of the more interesting markets today may well be crude oil. Does it make a break of this range we've been in for the last 2.5 months, or not? We're kind of sat right on the bottom side of it right now. So we'll see. Maybe the slight dollar weakness we've seen this morning is just enough to keep this market propped up here, but keep your eye on oil today for technical reasons. And actually, I just saw somebody in the room earlier was talking about the fact that something else that helped with the downside this week has been the fact that shale oil producers have seen production rates increase this week for the first time in a while. So despite the fact price still stays relatively low, and rig counts rose for the first time this year. That's it. So this is the key stat from from this week really. US rig counts back on the up, and we've been at $60 for a couple of months on average. $60 for a couple of months. That's just about just about economically viable for the shale gas industry. Also, don't forget the big dive in price over the last 6 months is only going to accelerate that process of making shale oil extraction more efficient. And so, whilst it's an expensive business, perhaps it's getting slightly less expensive. So, you know, the rig count on the up. This is definitely helping with the downside on crude this week. Right, final thing to talk about before we just get into the morning's activities is China. And more big downside for Chinese stocks overnight. 5.8% down on the Shanghai Composite. We are, what was it, 16% on the week, Bill? 16.2% down on the week. That is the third week of double-digit percentage losses. Here's my chart for the Shanghai Composite, long-term chart. And let me maybe zoom in on a 1 year here. It's a little bit, it's not the best chart here, but you know, you can see what's happened. I mean, we had a phenomenal rally. You know, over the space of 6 months, we went more than 100% to the upside. From sort of November 2014 to April 2015, it's just a sensational rally. It's just that it's all come crashing down here, well into bear market territory now. The thing about this is the Chinese government has been desperately trying to prop this up this week with various different policies and various different threats, like, you know, we may well see the Chinese pension funds start investing 26% of their pot in equities, apparently yesterday, so Shanghai Composite futures traders at the exchange, apparently they were getting phone calls warning them not to go short. You know, this, you know, of course, the government just trying to desperately do something about this capitulation, and it is a capitulation now. Now, I would say this is definitely not the low. I think this market has got more to go on the downside, where, you know, 25-30% off the high already. I think there's more to go. So this definitely has to be, you know, this has kind of gone not unnoticed, but certainly this hasn't been grabbing the headlines like it normally would have done if we didn't have this intense Greek risk right in front of our faces. And so, you know, when we get beyond Greece, whenever that might be, you know, we've got to think about some of these other things going on in this world. It's not, I mean, Greece is not, at the end of the day, Greece is not, I would say, the biggest risk for the global economy. And except it feels like it is, because it's right here, it's right now, and it's dominating the media. It's not. So when we get past the Greek thing, there are other things to be concerned about. And certainly this China stock market bubble bursting is definitely up there as one of the things to be most worried about, along with the kind of Fed, of course. So anyway, yeah, got to carry on. Another terrible week for Chinese stocks. That's 3 in a row now. All right, so let me just show you the calendar for this morning. Of course, no action this afternoon on data. The US is shut. So we've got some PMI readings that we've actually already been getting coming down the wires. So let me just update you on that. You'll know this already, but from the services PMI front, Italy's figure was better than expected, 53.4. We had expected 52.3. France's figure was in line at 54.1. Germany's figure was slightly worse than expected, 53.8 versus 54.2. So, and then the Eurozone PMI as a whole was in line at 54.4. So mixed, neutral data here from Europe on the PMIs, I would say. So we've got the UK data left. This is coming at 9:30. Again, services PMI, we're expecting an increase from last month. 57.5 is the forecast. And then that is it for data. Apologies. Retail sales out of Europe, 10 o'clock. We're expecting plus 0.1%. And then that's it. Now, we do have Merkel speaking at 1:30. you know, you never know what she's going to speak about, but of course she's been particularly quiet this week. That's all I'll say. She's been very, very quiet, preferring to keep to the sidelines and not make too many comments. Whether that's going to change, is this going to be Merkel's last-ditch attempt to try and convince the Greek people to vote yes? Probably. So it may be some interesting comments from Merkel at 1:30, but then that's it. So it's a very quiet session. So bear that in mind, okay? All right, enjoy the final day of the week. Thanks a lot.